What's up, world? This is Serge W.D. Haiti of Serge W.D. Haiti, CPA PLLC, where life is good and living is better. And I'm the dreaded CPA. And today I'm presenting this video on the topic for construction contractors and subcontractors as it relates to sales tax that should be collected and remitted in your business. And also to answer a few questions that I have received from viewers on other platforms, and I'm going to consolidate it into this video today. So, as an introduction, businesses that construct or make improvement to houses, businesses, or undeveloped land are considered construction contractors. I typically call them general contractors, and they either are distinguished between the general contractor that gets the main contract with the client, who then sometimes may subcontract out the work to another subcontracting company to fulfill a certain part of the contract, depending on how the contract is written between the primary parties of the contract. So most states do not require general contractors to collect sales tax because they are treated as consumers, and they usually pay the sales tax at the time that they purchase the materials and supplies that are going to be used in the construction project. So one of the questions that I received was, when are construction materials subject to sales tax? Well, in most states, construction contractors must pay the sales tax when the materials are purchased, regardless of when it is used or if it is resold. They will not have to pay the sales tax on the finished product, and that's just in some states. So you will have to review the state statutes in your state to determine if sales tax are due either at the point of sale, or if there's an additional tax that must be collected when the product is the finished product, the finished constructed product is ultimately passed on to the client or the customer. There are a few states that treat construction contractors as resellers, and that the purchase of supplies are ultimately resold to the end user, which is the customer at the end of the day. And these are determined based on the language in the contracts. And there are the main two type of construction contracts that are usually used in a construction project is either the lump sum method contracts or the time and material contract. Some construction contractors, that's a tongue twister, are required to pay sales tax on the purchase, and they may be exempt on paying sales tax, and they are ultimately exempt from the general rule. And this just depends on the type of contract that's negotiated, and also the type of customer that they are working with. So this section, I'm gonna give a description of the two types of contracts between the lump sum and the time and materials contract. And here is an example of a lump sum contract. So there is a general contractor who meets up with a customer in the state of Florida, and the customer wants to build a home from the ground up on undeveloped land. So all the specifications are provided to the general contractor. The general contractor has a good idea. He's been doing this for like 30, 40 years, so he knows, okay, to build this type of home, it's going to require this amount of time and this amount of resources and this amount of overhead to get it completed. So they give them one set price to get the contract completed or get the construction project completed. That is an example of a lump sum contract. Whereas in the same scenario, same facts, same situation, however, this is a contract that this company, a new company, hasn't been familiar with, but they are, reputable. They're coming up in the industry. They're making their mark. So they bill the customer based on the time that it takes to complete the project, the materials and supplies that is to build the project, and the overhead and the profit. So since those items are itemized as the work in progress is completed, this is considered a time and materials contract. Now the difference between these two contracts is one has to pay sales tax at the purchase of everything or the materials and supplies, whereas which is the lump sum contract, whereas the materials and time contract, they are considered a resale, where they purchase the materials, they pay the sales tax, maybe exempt, maybe not, but at the end of the day, they're keeping an itemized log of all the materials and the time that is put into this construction project. So when they ultimately turn the project over to the customer, the client, they will need to collect the sales tax on the sale of the product, finished product, and ultimately remit those sales tax back to the Department of Revenue in the state of Florida. And again, the example that I'm giving is based on simple facts, and depending on the state that you're in, you might want to, consult with your accountant, your CPA, and the state statutes to determine what taxes are due and what should be collected and remitted to your Department of Revenue, because you ultimately are going to be responsible for the sales tax. So if any of you companies that are out, construction companies that are out and you're not sure, you can consult with me. And if you need to get registered with a resale certificate, my doors is always open, my phone is always available to you, and we can get that situation taken care of. So one of the next question was, who's ultimately responsible for the sales tax liability? Well, the prime contractor or the general contractor deals with the customer directly, and the subcontractor deals with the customer at very little or not at all. They receive their payment from the general contractor, and they may have to purchase materials, and those sales tax are usually due at the point of sale. But that also depends on the state that you're in, and the contract that you have with the general contractor and the subcontractor. And if your general contractor ends up going bankrupt, you may be liable for some of the sales tax that is due on these types of contracts. So make sure that you have your contract reviewed properly, and you also review the state statutes to determine what taxes will be due on the sale of these construction projects. The next question that I received was, can a customer's sales tax exemption flow through to a contractor? And this ultimately depends on the state that you're in and the state statute. But instead of answering the question as a yes or no, I would just give a strategy. If you have a customer or a client and you know that they have a sales tax exemption, the best thing would be to have the client purchase the materials and supplies needed to construct the building, and you would structure the contract in a way that the materials and cost are not included in the sales price of the project, so that the customer is ultimately buying it. They're receiving the materials, with the sales tax exemption, and you don't have to go through the back and forth with the state to determine, oh, okay, you owe some taxes now, when in actuality you didn't owe any taxes because you completed the job for a state tax, sales tax exemption holder. And these are typically in contracts with, like, the government. If you have a contractor may have a government construction project, which is something that's going to be happening in the future. And in their contracts, you may want to include some language in there that the government is going to purchase all the materials, so that the sales tax exemption is taken care of in that one swoop or that one transaction, and all you need to do is use the materials that they purchase and construct the project. The next question that I have is, when is the sales tax due on materials and supplies purchased for resale? And you're gonna hear me say this a lot in this video, maybe like 4 more times, but it depends on the state statutes that is governing your state. But the sales tax is usually due when the point of sale occurs. So once you purchase the materials from, let's say, Home Depot, you purchase the material supplies from Home Depot. At that point, they would collect the sales tax on the material. And if you have a sales tax exemption, there wouldn't be any sales tax due, so they will back it out. But ultimately, when you resell the product to the customer, that's when the sales tax will be collected, and depending on the timeline of your state, the sales tax will need to be remitted before that due date. The next question is sales tax due on materials purchased in one state but used in another state? And the answer to that, it depends on your state statutes that you're in. We have sales tax and use sales tax and use tax, and these taxes govern what should be collected in the home state and the other state that has nexus on the transactions. But ultimately, there will be an exchange somewhere, so sales tax will be collected at one point, And depending on the state that you're in and the language of the state statutes, taxes will be collected and due on that exchange. And the last question is, what happens if the sales tax rate changes after purchase but before delivery? In situations like this, it depends on your state statutes that you're living in. I think that's 3 times. I don't think I'm going to say it another time. But you would keep track of all your inventory and all your supplies and all your materials in your accounting information systems. And depending on the state statutes, oh, there it is. Depending on the state statutes of your state, you may receive a credit for these items. So just make sure you review your state statutes and your contracts to determine when is the sales tax due. Is either 2 type of delivery contracts, either at the shipping point or at the destination, and depending on the language of your contract that you have with your customer will determine when the exchange occurs and when the sales tax should be collected and when it is due to be remitted. And this is a quick video that I made for my general contractors and subcontractors that are in the construction business and making their moves in the construction industry, or those new entrepreneurs that are either studying to become general contractors and wanted to get a understanding of sales tax that they didn't know about. And in this video, we went over the types of contracts, which are the lump sum contracts or the time and material contracts, which are 2 of the many types of sales contracts general contractors may have. The state statutes, depending on what state you're in, that determines when are the sales tax due to be collected and remitted to other states, and the sales tax exemption of customers and how to handle those types of transactions. At the end of the day, you will need to have a resale certificate in order to collect those, while you collect those taxes and remit it back to your state. And that is my video, and I am the dreaded CPA, Serge W.D. Haiti of Serge W.D. Haiti, CPA PLLC, where life is good and living is better. Peace.